Today, March 21st, 2025, delivers substantial updates for major cryptocurrencies such as Bitcoin, Ethereum, and XRP, which are currently displaying concerning technical formations. Franklin Templeton, a globally recognized investment management firm overseeing vast assets, has recently filed for an XRP ETF that aims to closely track its spot price while subtracting operational fees. This filing occurs as Ripple's highly publicized and prolonged legal dispute with the SEC, which has spanned several years, might finally be approaching a resolution that could redefine its market standing. The convergence of these developments with today's triple witching event, where stock options, index futures, and index options expire simultaneously, underscores the increasing relevance of XRP among institutional investors and financial entities worldwide. The proposed XRP ETF, set to be listed on the CBOE BZX exchange platform for trading, will rely on Coinbase, one of the largest US-based cryptocurrency exchanges, to serve as the custodian for securely managing XRP assets. Investors holding shares in this ETF will not be entitled to receive additional benefits from network forks or airdrops, a condition explicitly outlined in its structure. This triple witching event, occurring on the third Friday of March, June, September, and December, involves the expiration of contracts valued at over $4.5 trillion, historically leading to significant volatility across both stock and cryptocurrency markets. Given that the outcome of Ripple's ongoing lawsuit could significantly influence the regulatory approval prospects for this ETF, today's market dynamics are particularly critical. Franklin Templeton, a firm currently managing assets exceeding $1.5 trillion on a global scale, enters the XRP ETF competition alongside established players like Bitwise 21 Shares and Canary Capital. The SEC, tasked with maintaining market integrity, is actively engaged in reviewing these multiple XRP ETF applications amidst a shifting regulatory landscape. Grayscale's proposal, which also seeks to offer an XRP-based ETF, has been postponed by the SEC, with a decision now scheduled for May 2025, adding to the uncertainty surrounding today's market movements. This growing interest from institutional giants reflects XRP's emerging potential as a credible mainstream investment vehicle within financial markets, especially as triple witching looms. Bloomberg analysts, who closely monitor cryptocurrency trends, have assigned XRP ETFs a 65% probability of gaining approval under current regulatory conditions. In comparison, Litecoin holds a higher likelihood at 90%, while Solana stands at 75%, according to their comprehensive data compiled earlier this year. These projections, originally established in February, might not fully incorporate the recent market shifts and legal developments that are unfolding as today's triple witching event approaches. Ripple's ongoing lawsuit, which remains the central factor influencing these ETF approval odds, could see its impact amplified by the volatility expected from the expiration of over $4.5 trillion in contracts. Ripple's legal confrontation with the SEC, which commenced in December 2020 regarding the sales of XRP, centers on whether it constitutes an unregistered security offering under federal regulations. The SEC contends that XRP's distribution violated securities laws, a stance that has notably constrained its adoption by institutional investors over the past 4 years. This dispute has created a persistent cloud of uncertainty, limiting XRP's growth potential compared to peers like Bitcoin and Ethereum, which enjoy clearer regulatory standings. A definitive resolution, potentially imminent, could provide long-awaited clarity on XRP's regulatory classification, fundamentally reshaping its role and perception within the broader cryptocurrency ecosystem as triple witching unfolds. On March 10th, Fox Business journalist Eleanor Terrett, known for her in-depth crypto reporting, offered significant insights into the Ripple SEC legal battle, based on information from insider sources. She reported that Ripple's lawsuit might conclude in the near future, a development that could align with today's triple witching event and its expected market turbulence. The SEC has recently dismissed lawsuits against other cryptocurrency entities, such as Kraken and Consensus, suggesting a potential softening in its regulatory approach toward Ripple and XRP. These shifts, closely monitored by market participants and legal analysts, add a layer of complexity to predicting how today's expiration of $4.5 trillion in contracts will affect prices. Market reaction to the March 11 news, which hinted at a lawsuit resolution, saw XRP increase by 4% almost immediately, rising from $2.63 to $2.74. By March 13, however, it had retreated to $2.65 amid subsequent market fluctuations, a pattern that reflects the uncertainty surrounding today's triple witching event. Bearish trends became evident on the 4-hour chart, indicating increased selling pressure as traders positioned themselves for the expiration of stock options, index futures, and index options. This volatility, historically amplified during triple witching, highlights the persistent influence of the lawsuit on XRP's price performance and broader investor sentiment. Bitcoin's price, which has declined to $83,580 from a weekly high of $87,158, has formed a rising wedge pattern characterized by two ascending, converging trend lines on its chart. This technical formation, sitting atop a double top at $108,150 and a death cross from March 14th, suggests a potential drop as triple witching approaches. The next target for Bitcoin, should this bearish pattern play out, is $76,890, the March low, potentially accelerated by today's expiration of contracts worth over $4.5 trillion. Analysts warn that the combination of these technical indicators and triple witching volatility could lead to significant downside pressure in the short term. Ethereum, having slipped below the critical $2,000 threshold recently, has developed a triple top pattern at $4,005, with a neckline established at $2,140 on its chart. This pattern, often a precursor to a strong bearish breakout, has already seen Ethereum breach the neckline, dropping below the 50-week and 200-week moving averages. This technical breakdown points to further downside, with the psychological $1,500 level as a potential target, a move that could be exacerbated by today's triple witching event. The expiration of $4.5 trillion in contracts may intensify selling pressure, pushing Ethereum lower as traders adjust their positions rapidly. XRP's chart exhibits a head and shoulders pattern, with a neckline at $1.93 and shoulders at $3, signaling potential downside risks, despite the SEC concluding its Ripple case. It failed to break above the shoulders this week, reinforcing the bearish outlook as triple witching looms with its inherent volatility. A drop below $1.93 could see XRP fall to $1. A significant decline that might be triggered by today's expiration of stock options, index futures, and index options. This pattern, combined with triple witching's historical impact, underscores the precarious position of XRP in the current market environment. Signum Capital, a Singapore-based firm, notes in a recent research report that Bitcoin's stability has increased with ETF adoption, reducing its traditional volatility. Unlike altcoins such as Ethereum and XRP, Bitcoin now experiences shorter performance cycles, less tied to the 4-year halving events that once defined its price movements. These shorter bursts of outperformance and underperformance are driven by liquidity flows, investor positioning, and changing risk sentiment, a shift evident as triple witching approaches. Today's event, with over $4.5 trillion in expirations, could widen this stability gap between Bitcoin and altcoins significantly. CryptoQuant CEO Kai-Young Ju recently predicted bearish or sideways Bitcoin action for the next 6 to 12 months, citing on-chain metrics signaling a bear market. He highlighted that fresh liquidity is drying up, with new whales selling Bitcoin at lower prices, a trend that aligns with today's risky technical patterns. This bearish outlook could be amplified by the triple witching event, as the expiration of contracts worth $4.5 trillion introduces additional uncertainty into the market. Analysts emphasize the importance of staying informed, as today's volatility may reshape short-term price trajectories across major cryptocurrencies. Solana surged by 24% on March 8th, following former President Trump's announcement of a U.S. crypto reserve plan, briefly reaching $180 before declining. It has since settled at $151.45 as investors took profits, reflecting the broader market's reaction to macroeconomic developments. Kubetix, currently in its pre-sale phase, offers a decentralized VPN system rewarding users with TIX tokens, showcasing innovation amid today's triple witching turbulence. These movements illustrate the dynamic and multifaceted nature of the cryptocurrency market as it navigates significant expiration events. The broader cryptocurrency ETF landscape is expanding rapidly, with Bitcoin and Ethereum setting precedents for altcoin-based funds in recent years. XRP's potential ETF approval, bolstered by Franklin Templeton's filing, could accelerate this trend throughout 2025, pending regulatory clarity. Today's triple witching, with its $4.5 trillion in expirations, may test this momentum, introducing volatility that could sway investor confidence. Ripple's case, nearing resolution, might shape how the SEC views altcoin funds moving forward, adding stakes to today's market dynamics. If XRP ETFs gain approval following the lawsuit's end, substantial capital could flow into the asset, potentially driving a significant price surge. Optimists anticipate this outcome, while skeptics caution that an adverse development or triple witching fallout could undermine XRP's stability. Today's event keeps markets on edge, with over $4.5 trillion in contracts expiring amid risky technical patterns across Bitcoin, Ethereum, and XRP. Investors are advised to remain vigilant as these factors converge, potentially reshaping the crypto landscape in the short term. Please like and subscribe for more updates. Thank you for watching on YouTube, or if you are listening on Spotify, give us a follow.